welcome to the BF Anderson Technical Report for June 23rd. We've got to be open-minded about good outcomes, and we also need to be open-minded about bad outcomes. And in last week's video, we talked about getting from point A to point B. So let me say it another way. In 1983, if I would have gone into a meeting with investors and if I would have said to them, the Dow Jones Industrial Average is currently at 1,000, and within 10 to 15 years it's going to be 12,000, I would have been laughed out of the room. I would have had no credibility. But guess what? I would have been right. And so the point being is you have to be open-minded to these positive possibilities. Now, the problem comes in, as I pointed out last week, is that you get into these consolidation phases where the market will either do poorly for a period of time, and sometimes it's 2 years, sometimes it's 3 years. I mean, it's hard to say. The 87 situation really didn't last very long. It was in a recovery mode rather quickly. So you've got to have loyalty and commitment and confidence in a discipline, because the discipline has to be, I'm going to invest in the very best companies out there, because if their earnings continue to grow, those stocks are the ones that will come back after consolidation periods or be something new that rises during a consolidation period. Now, we just finished a consolidation period that went from 2014 to 2016. So it's been somewhat of a difficult period in here. But this all started. The whole problem with the market started back in 1998. So we're talking about roughly a 20-year period here. I mean, 18 years, 15 years, it doesn't matter. Point being is, and here's a graph just to kind of get this conversation started. This is a graph of the S&P 500 earnings. And now I have done it as a 10-month moving average. This is actually a monthly chart. Now, the economy just started to deteriorate around 1998. Now, you can see that earnings started to turn down, 98, 99. You had somewhat of a pop in this period here, but then we had the recession of 2000, the dot-com bust, bear market. Then we started to see somewhat of a recovery in corporate earnings, and then the big recession that hit in 08, 09 really took corporate earnings down. So the point being is we have now seen a small upturn in corporate earnings, and I will say this last quarter earnings season was pretty darn good. So are things gradually starting to get better? Because back here in 98, things gradually started to get worse. So if you go back and study the 1980s, early 1980s, things just gradually started getting better. Reagan came in as president. We started getting into a pro-business environment. They cut taxes. This all created an environment where the Dow went from 1,000 to 12,000. So just think about this for a minute, the magnitude of this. Currently, the Dow's at 21,000. If it repeats what it did in the 80s, that's over 200,000. Well, you can take it down and say, okay, what if it does half as well? Well, that's 100,000 on the Dow. Well, you could then say, hey, what if it only does a quarter as well? Well, that's 50,000 on the Dow. So you do not want to underestimate the concept of things gradually getting better. And there will be corrections and there will be consolidation periods. But in order to get from point A to point B, you got to go through that, and you've got to have confidence in your system. Now, another way to kind of look at the economy, I think is a smart way, is to keep an eye on the yield on the 10-year U.S. Treasury note. Now, you can see here back in 98, interest rates were above 6%. And sure enough, they just started coming down because the economy wasn't doing well. Interest rates drop when there is little economic activity and there's slow GDP growth rate. So, we got into the recession here, started to get a little bit of an uptick in interest rates, but then they just started down. Now, you have to realize interest rates have been dropping for 35 years, and they in 2013 got down to the lowest level in history. even lower than the Great Depression. So are we starting to see a little improvement here? Are we starting to see where, like corporate earnings, you're seeing the little upturn here, interest rates are kind of saying the same thing. Now, if we get into the big indicator, which is the market itself, and I'm using the NASDAQ here, and I'm being very consistent on these graphs. I'm using the 10-month moving average on this as well. Okay, here we go. In 1998, the economy just starts to deteriorate. Recession, bear market, recession, bear market. Federal Reserve bailing out banks in here. I mean, we had to come in with the TARP program. We almost lost the banking system. That's the difference, by the way, between a normal bear market and what we call a systemic risk type of bear market, where we're about to lose the banking system. In 1929, we did lose the banking system. So you can see how important this period could be. So then we stay in this period all along from 98 all the way up to where we broke out around 2014. We rallied, but then the economy started to slow again, and we went into a consolidation period. Now we're breaking out. So again, if we look at interest rates are popping up, the economy is getting better. The stock market is telling you that probably things are going to get better, and we're seeing improvement. Now let's get into the top 5. This week we continue to see a lot of technology names, mainly software platform. And what I'm going to do this week is I'm going to focus in on one company. So this is Activision Blizzard. You can see the graph, clear as a bell, smoke up a chimney. Here's Alibaba, another one just doing extremely well. This is the Amazon of China. We all know about Amazon. Here is NVIDIA, which is technology, hardware, kind of like a Cisco system, 1995. You can see how strong that uptrend is. Here's another company, Shopify, which is actually pulled back in the correction. They had a secondary offering. But let's talk about this one. This is the one I want to talk about. This is Tesla. Tesla hit an all-time new high yesterday. And what I think is important to understand that's going on here is, just like Amazon.com, I first discovered as an investment Amazon in 1997. Nobody understood it. It was strictly a bookstore competing against Barnes and Nobles and all the brick and mortar bookstores. So no one really understood Amazon 20 years ago. But now everybody understands it. Everybody gets the packages at their house every day, and they see it in the news. And Jeff Bezos is now about the richest man in the world and all that kind of stuff. Tesla is similar. We don't really understand the stock today like we could understand it 20 years from now. Let's just say you look out in the parking lot and there's half the cars, 75% of the cars are electric. I just saw a video the other day where they're starting to make airplanes that are electric. And it's an interesting technology, and it really does solve a lot of problems. So, Tesla announced this week that they're more than likely, they are in negotiations to build a manufacturing plant in Shanghai, China. So, this could really solve a big problem for this company. So keep an eye on Tesla. This stock is really acting well, making all-time new highs. So if you have any questions, give me a call as usual. I'm here every day. Thank you.